The case for including fine wine in an investment portfolio is overwhelming. Using independent data going back 25 years, in this very short video, I want to show you why. We have good quality independent data on fine wine performance going back to January 1988. Since that date and today, fine wine prices have risen by a staggering 2,500%. That means that if you'd put $10,000 into fine wine in January 1988, today that would be worth $250,000. That's a compound annual growth rate of over 10% per year for a quarter of a century. Not surprisingly, no mainstream asset, whether equities, bonds or commodities, can match that performance. But the story doesn't end with price gains. The volatility of returns is critically important. And here what we find is that fine wine has exhibited monthly volatility significantly below equities and commodities, despite its returns being higher. In other words, a bit less of this and a bit more of this. In financial geek speak, we talk about the Sharpe Ratio of fine wine, which is significantly higher than that of comparable assets. The final piece of the puzzle is correlation. This is another geeky expression which simply means it's better if all your assets don't go down in price at the same time. A lot of supposedly diversified portfolios are actually doing this right now. Fine wine isn't driven by the same factors which move prices in financial markets. In fine wine, there is no leverage, no institutional traders. There's generally a buy and hold mentality, and there's a critical alternative use case. If prices ever do fall in fine wine, holders simply elect to consume rather than sell. All this means that fine wine prices are almost completely uncorrelated with mainstream assets, and this gives fine wine important diversification characteristics when added to a portfolio. So I hope you can see that the case for including fine wine in an investment portfolio is simply overwhelming. For a quarter of a century, fine wine has delivered exceptionally good returns with low volatility, a high Sharpe ratio, and almost no correlation with mainstream assets. I'll leave some links in the description below for how you can find out more about getting involved in this exciting alternative asset class. And I'll catch you on the next video.